Hi everyone. Today we'll be discussing about throughput accounting. Throughput accounting is a concept basically which was introduced back in 1980s at a time when industrial revolution took place and most factories would convert from labor to machine-based manufacturing. It's more suitable for machine-based manufacturing organizations. It could also be used in service organizations, but it was basically introduced and is more suitable for manufacturing organizations. There is one novel which was written back in 1984. The name of the novel is The Goal, which tells us a story about a factory manager who used throughput accounting to turn a potentially loss-making factory into a profitable one within a span of 3 months' time. And especially the example used in that novel is also like a real life example which helps us to understand the key concept which is used in throughput accounting is the concept of bottleneck. So if you want to understand using a real life example how you can understand the concept of bottleneck, you should go to the technical article. I'm not asking you to actually go to the novel because the same novel is being discussed in a technical article which is being written on throughput accounting. Let's talk about the concept itself. What is throughput? Generally, throughput is basically a measure of return. Okay, and in decision making, the objective is obviously to maximize the return as much as possible. Now, when we talk about the definition of throughput is basically the rate at which system generates money through sales. And if I will tell you the formula for this measure of return, it's simply the selling price or sales minus the direct material cost. Now, the reason why we are only considering material as a variable cost is because of the assumption used within the concept was that in machine-based manufacturing, because it's not a labor-intensive job, so most of the labor, they are paid fixed salaries, monthly salaries, let's say. So it means that the labor cost turns out to be a fixed cost. And as a result, the only variable cost is considered to be the direct material cost. So in short, we have to see how we convert that raw material, which we buy from our supplier, into revenue, definitely after processing the raw material into finished goods. The problem that the organizations will face is that the machines or the processes which are being used to process that raw material, these machines, one of the machines could be taking more time to process the output. And as a result, the output process could be slowed down. And even if we have demand in the market, we may still not be able to meet the demand because of the slow production process, not as a whole, but because of one of the machines that is holding up the output. So also we have to understand this thing that it is possible that more than one machines are involved. The concept of throughput accounting specifically applies when you have more than, you can say, one machines used for processing, where the input of one machine has to become the output of the second machine or second process, and maybe there is another process as well, which will be involved. So in the way, the possibility is that one of the machines or processes involved takes more time to process the output. And as a result, the overall process needs to slow down because the other machines have to wait for the output to be completed so that, the finished good could be completed. On the other hand, if let's say manufacturing process, let's say it has two processes, heating and shaping, and there is no delay in between. The input of one, the output of one process doesn't have to become the input of another process in a waiting time. It will be a continuous process. So the output of, let's say, the heating directly becomes the input of shaping process, and it directly converts into output. The problem will arise in a situation where the output of one process is ready, but that output has to wait for the second process. Why? Because the second process is taking more time to process the earlier input which was being supplied. And as a result, it would either create inventory at the back end, or it would mean that the first machine has to wait for the second machine to complete the output so that the process can move on. the concept of throughput accounting, as I said, is linked with one of the key concepts, bottleneck, but at the same time, it is also linked with the concept of just-in-time inventory, because the other factor that was introduced at that time was that, yes, we are moving towards the machine-based manufacturing, but it doesn't mean that we should be producing more and more inventory, because the more you produce, if it's more than the demand in the market, then it would lead to holding costs, and obsolescence costs will increase as a result. So let's try to understand in a different way how we can understand the concept of throughput accounting. I hope quite a lot I explained theoretically as well. Uh, so as I said, that basically throughput refers to the rate at which the system generates output, and it's basically a measure of return. So what do we basically want to achieve here is that we want to maximize our throughput, which could be calculated by taking the difference between the selling price and direct material. As I said earlier, what is our objective? Our objective is to maximize this throughput. So we want to maximize this throughput. What we will do is we will buy the raw material from our supplier, but this raw material needs processing. Okay, it has to pass through different processes before being converted into finished goods. And this process, as we said, it's a machine-based manufacturing, so it could be that different processes are involved. So it's possible that one of the processes, let's say, one of the processes cutting, okay, and then it has to go to another process, let's say shaping, okay. So now the process is that the raw material has to go through these two stages before being able to convert into a finished good, which could then be sold, and it would help us to generate the revenue. Now, the problem, as I explained earlier, is that one of the processes could be taking more time. So let's take it in that way, that this cutting process is taking 3 minutes, let's say, to process 1 unit. Okay. And on the other hand, when the output of this first process, cutting process, becomes the input of shaping process, the shaping process, on the other hand, will take, let's say, 5 minutes to process 1 unit. Now, what's happening here is that the moment we input the raw material in the first process, it generates an output, and that output immediately becomes the input of the shaping process. Now, when the second batch of raw material will be processed by cutting within 3 minutes, in the meantime, the shaping process will be busy in processing the first batch. Okay, now there is a, you can say, a gap of 2 minutes in between, which is overlap, which is actually the difference which will create inventory here. Now, what will happen is that the second batch will be processed within the next 3 minutes, which is like 2 minutes before the end of the second process. So as a result, here it will keep on increasing our inventory level. Here we have is the output of cutting process. Now, this output of cutting process, which was supposed to become the input of shaping process, but as we said, the idea is just in time. So it means that here we should not be allowing any inventory. Just in time says that the inventory level should be, there should be no inventory or a very low level of inventory. But the problem that is happening is that because if cutting machine or cutting process will continuously work without breaks, it would keep on generating excess inventory, which could not be processed by the shaping process in the meantime. So because we want to avoid the inventory which could go obsolete, it could be, holding cost will increase as a result. So the we have to come to the solution. Okay, the solution for this could be that the cutting process needs to wait. The cutting process needs to wait, let's say, for 2 minutes. So, once the output of the shaping process is complete, then the cutting process will start the processing, so that the output of cutting process will directly become the input of shaping process. And as a result, the thing that the inventory was coming up as a result, that thing we can avoid if we will hold the cutting process. So it's like the machines don't have to be working all the time, especially this cutting machine, which is processing much quicker. Okay, the thing that is holding up the process is shaping process. So it means that for us, the bottleneck process is shaping process. What is bottleneck process? I hope I explained it in that way, that this shaping process is holding our output. If shaping process, let's take it that way. If shaping process also processes within 3 minutes, then the cutting process will not have to wait for, let's say, 2 minutes. So, the continuous process would allow us to generate more output, and that output could be sold, assuming that we have demand in the market, but the production process is slow. And because of the slow nature of the production process, we are not able to maximize our output. If we are able to maximize the output, the demand is already there. We can sell it and we can maximize our throughput. So the main concept we have here is that there will be a bottleneck in the process. One of the processes will be taking more time, and as a result of this process, the other processes have to wait. There will be idle time in the other processes, which as a result will restrict our output. So all our planning, the next step when we will discuss about the theory of constraint, we will discuss that how we will plan our product mix, how many units of each product should be produced in a way that we can maximize our throughput. So that we will discuss in the second half. We will discuss how to maximize our throughput with respect to the bottleneck. The thing that is holding us up is the bottleneck. So all our planning will be circled around the bottleneck process. And we will also discuss about the ways how we can get rid of this bottleneck, how we can actually either reduce this time, we can add some more machines here if possible, or we have to make the cutting machine wait for some time so that the shaping process can process its output, and then we can move on to generating more output, which would then become the input for the shaping process. So let's discuss this in second half. Theory of constraints, which would actually be used to determine the optimum product mix, the number of units of each product that need to be produced and sold in order to maximize the throughput, which is our ultimate objective.